Hi everyone, Basil Chapman sitting in for Tom O'Brien and part of the team here, and Tom is at the Gold Show. What a fantastic time to be at the Gold Show for Tom. His new book is out, fabulous book called The Art of Timing the Trade. Your Ultimate Trading Mastery System is available at Amazon and Barnes & Noble, and it's just a fabulous book. Been going through it, enlightening new additions to us technical traders. Great, and not only that, what beautiful timing for Tom, who just nailed that silver short with the ZSL. Congratulations, Tom, and it should be a fantastic show there in New York. I think it's at the Marriott Marquis, so congratulations. I'm part of the team, as I say. My service is called The Opening Call. It's a daily newsletter, as well as my being here 11 o'clock till 12 o'clock Eastern Time, Monday, Tuesday, Wednesday, and Friday. And the number to call, of course, is always 877-927-6648. Now, let's go through the numbers. Let me just make it real simple. I'll explain my system. The Chapman wave is really based on grading, assessing each higher peak. I expect that after you get to 4 peaks, that's where you can have a much sharper decline, and it can go higher. There are other technical tools for that, and we grade the troughs on the way down. So now let's look at what is very important to me. First of all, it's the Dow. The Dow closed up 45 at 12,648. 12,684, and this is very important to me. The inverted Roman candle wick, it's just a technical term that I invented some time ago. I call that candle from Friday an inverted Roman candle, and what is important is to fill that wick and then to close above. That says that if the Dow is able to close above 12,760, especially if it's in the next day or two, rather than pulling back, taking out today's low and closing below 12,620 or worse, 12,579, that is the low of the 6th, that's Friday, I will be looking to see a new recovery high. But to do that, you need the stochastic and the MACD to revert and to move quite a bit higher. Now, what's also important is that in the weekly chart, we've gone to a higher high in leg E. Remember, I talked about a D. Well, leg E at 12,876. We need a new high bar above this to extend that. The stochastic is at 92%. It's a technical tool I use, and it is when it is above the 85 level, 85%, that's usually very positive. When it's in the 90s, that is extremely positive as long as it stays there. And so far, at the beginning of the week, it has stayed there. Now, we get to this leg D. Remember, I was talking about from the low bar, in this case from 64.69, the low of March the 9th, actually where we got a buy signal right on that day, that you've got 4 legs to the upside. This is leg D, and it's got tremendous resistance to break in the 12,000. I'd call it the 12,890s to the 12,990s. That resistance is the challenge for May. The support in the weekly chart is at 12,474, and that's going to be key to monitor. So let's go on. The S&P, SPX.X, there it is. S&P closed up 6 at 1346. Not quite as good a candle, not as good a bar in the formations from Thursday, Friday till Monday, and the stochastic's down to 62% of the MACD is not good. I have to rely on this up channel, which the S&P has been in since, I'd say since about July, September of last year. It's been in an up channel, and where does that up channel, very important support, come in? It comes in at 1318. So if the S&P closes at any point this week under 1318, be careful, because we're going to go into consolidation. My thinking in the overall perspective is that we will struggle to a nominal new high, and I am expecting at least a 6 to 8 week pullback. It doesn't have to be huge in points, 10, 12%, but it could take time, because this is a rotating, correcting market, and it's been that ever since the summer of 2009. Every time there's a sharp pullback. Look at the way the commodities have just been smashed, and yet the market, the Dow and the S&P, have actually maintained pretty good upside momentum even with that. So let's look at the cues. 1, 2, 3. The 1, 2, 3, there we go. The Qs are right now. That's the NASDAQ trading vehicle, the triple Qs. It's the Power Shares Trust, and it trades really on the NDX 100. That right now has made a peak B in the, there's no other way that I can really count it at this point. I could call it an F, but it's peak B in the Chapman wave. Stochastic's holding very nicely at 78%. The MACD could deflect higher if the Qs are able to take out today's high of 58.92. If they do that, then the candle of Friday, that 59.20, will be what you have to watch closely. But a little later in the show, we might get into looking at the different important NASDAQ stocks. But right now, let's do this. If the Qs close underneath 58.30, let's call it 58.25, they will probably retest the 58.08 level of the fifth. That would say you've got that pattern I call the dreaded H. We've got to be careful of that. Meanwhile, the weekly chart is still very strong, as is the monthly. We're going to go on to the IWM. That's the RUT. That's the Russell 2000. Now, here is a much wilder chart formation. The Russell, you won't hear this in the newspapers. Surely the heading should have been, because the headings were 1 inch and 2 inches big. What, 50 pikers or something? 50 inches, 50. Very big. When we were coming smashing to the downside. But no one's talking about the transportation index at an all-time high. You don't see that as front-page news. Just bearish news, bearish news, bearish news. IWM, the Russell 2000, made an all-time high this month. It has gone to 86.81. That is above the 85.20 high coming from the 2007 June highs. Goes all the way to 34.26. Retests the 32.20 lows way back of October of 2002. This is news, because if you had to invert this, turn this upside down, you would get that pattern that I call the Eiffel Tower, capital A, inverted capital A. So this is, to me, something that needs to be spoken about. And we're going to go to the IYT, which is the transportation index, the iShares. They made a new all-time high. They went to the transportation index went to 90. Was that 96.30? No. That was the last time. It went to 100.67 from a 38.28. That's a 300% gain. That is incredible. All-time highs. In a kind of a holding pattern now, but the levels to watch if the transport, and this is with crude oil screaming to the upside. So the IYT is very positive. Let's just move on. I want to get to everything before we run out of time, because gold is very important. Gold itself closed up 13 at 15.05. Now, what's really important, we made a peak F. For any of you who are a little unsure about these charts, you can email me at basilchapman@tfnn.com. I certainly can't give you every single chart, but name a chart that you'd like to see. And if I have a chance, I will certainly send it over to you. The gold index, the GLD Spider Trust, is at 147.55. It came from 153.61, what we call a peak F top in the Chapman wave, on the 2nd of May. It was confirmed the following day. It plunged down to 142.55. That is an 11-point decline, and now it's bounced back. Not 50%, but it has bounced pretty strongly, and that's going to be very important because it's holding the 9-period exponential moving average. And just real quickly, I wanted to show the relationship between the UUP, which is the dollar index, and that dollar index is at 21.38 right now. It had a very nice spike. This is going to be leg A up in a weekly chart, and you've got the corresponding peak F in the weekly GLD chart, and that says that the most important level to watch on the GLD, it's been in this beautiful up channel all the way from November of 2008, just a magnificent up channel bouncing between the barriers of the upside and the support, the repellent line at the top and the propellant line at the bottom. And the most important level to watch will be 141 to 140, because if it cracks that, this could go down to the 135 level. So this is going to be very important to watch the relationship between gold and dollar. I'll try to get into that a little later on. And now we're going to go on. We're going to go to silver, the SLV. That is the SLV is the iShares Silver Trust, and that went to also a peak F top in the daily, a peak E in the renotated weekly chart at 48.35, plunged to 33.58. It is just above the left side important low bar of 33.01 made on the 15th of March. It's going to be very important that it tries to fill the gap between 36.89 and 38.01. That is going to be a very important level to watch. Why? Because if it can fill that, it has a chance of touching, just tagging the 9-period exponential moving average at 39.09. Will it revert back and test the lows? Everything about the weekly and the daily chart says there's a good chance. You know that I don't really have a sell signal in the MACD of the monthly chart. I can't believe it. Leg E, probably peak E. That is incredible. And the stochastic is still at 91%. I would not rule out a very strong rally in silver at some point, but maybe later on we have to get a retest of the 33.58. Let's go to crude oil, CLM11. That'll be June. I'm not sure they're trading June. A very strong bounce where? Right off the 200-period moving average. Folks, I need to talk just quickly about something that's coming up. You could use your Tiger points for this. I'm going to be doing a webinar on the Chapman Wave. It's not a webinar, a Master Trader Series, one-on-one here in the Boston area. And it's a seminar on Monday and Tuesday, June the 6th and 7th, 8 o'clock to 5. I actually extended the hour because I wanted that hour after the market close to discuss everything and prepare for the next day. So Monday and Tuesday, 8 a.m. to 5 p.m. here in the Boston hour, Boston area, 9 hours each day. Use your Tiger points. You can get if you buy the last day is today. If you can use your Tiger points, you will get a $1,000 bonus for this webinar. And believe me, I put everything I have into these Master Trader Series. I just love them. I do want to go to the crude oil. Nice bounce. Very important for the crude oil. If it's going to do anything here, watch the 100 level as support. Watch 105 as a breakout to the upside. And finally, we're going to go to bonds. I'm going to go to the TLT. That's the Lehman 20-year T-bond fund. Now, it's made a peak D in the daily. Remember we talked about the Chapman Wave? But the stochastic is at 92% and the MACD is still good. You know, there's some dichotomies here that are really interesting. How can you get a rally when finally you get a rally in the dollar? How can you get a rally when you got a rally in bonds? Why? I believe that there are still many people that are way underinvested in this market. So I am still remaining a bull. That's not to say we can't be a little bit cautious here, but I do like the action so far. And we're going to go to Travis in St. Louis. Hi, Travis. How are you?
Just fine today, Basil. How are you, man?
Very well, thank you.
Thanks for taking my call.
My pleasure.
Bought a position in J.P. Morgan today at the 61.8 retrace off the most recent low, and I was curious where I should put my stop or whether I should just go ahead and close the position out today.
No. I think you've got a terrific entry, at least in terms of risk reward. Folks, we're on with Travis. This is Basil Chapman sitting in for Tom O'Brien. We'll be right back with Travis at 877-927-6648.